I'm now joined by Mikio Kumada, a senior market analyst at LGT Capital Management. He joins us from Singapore. Thanks so much for being with us. So, Chinese banks, we've got ICBC, Bank of China coming out today. Just talk to us about the main themes in terms of what we should expect from the Chinese banking sector.
Well, the way we look at the global financial sector or global equities is comparative, of course, and our view is still that we do prefer the risk-return profile of the banks in the West, in the US, and also to a certain extent in Europe. And that's because the Chinese banking situation is actually disappointing relative to expectations. Earnings are growing, as we heard, and will probably continue to grow, but they're not beating expectations. So people still expect slightly a bit more than reality can deliver in China. And the other factor is that you have much lower earnings growth in China compared to top-line growth, which means that for every dollar in revenue they extend, they earn less and less dollar at this moment. Now, this is not the end of the world. This is a cyclical earnings downturn, perhaps, which may last for some time more. But it's a picture that is still not benevolent in an environment where you are facing regulatory issues and the economy is slowing down, because the operating leverage, so to speak, is negative in the Chinese financial sector in broad terms. There are positive exceptions, I'm sure. So that's how we see it.
What about these assertions that perhaps Chinese banks, all these problems are priced in and perhaps it's now a good time to buy them? I mean, what do you make of the regulatory risk, first of all, and also the risk to non-performing loans?
Well, you know, in relative terms, there is a slight improvement for sure. I mean, even we have a relatively cautious view, as you might have heard from what I said earlier, but the situation is less bad than it was before. Earnings and the performance is coming closer to reality. So that is, in financial market terms, usually an improvement, an indication that some of the bad news is priced in. Going forward, however, you know, there still remains the question of what will exactly happen to the Chinese property situation. What will happen with once these loans that are off balance sheet will be taken back on balance sheet, and how much they need to write down. At the end of the day, the question is, will China avoid a hard landing or a soft landing, and how much will it affect financial sector earnings? This is not the sector you want to be in such a situation. Primarily be invested in financials. So you don't want that in such a situation.
What's your view on the U.S. double dip, Mikio?
We have, I mean, it's not our baseline scenario. We still expect moderate growth going forward. We're slightly more optimistic. We do have, however, a risk scenario. I mean, there is definitely a risk of a double dip. However, we heard earlier that Mr. Rubini sees a 40% chance. I think in our case, it's closer to a 20%.
All right, Mikio Kumada, LGT Capital Management. Thanks so much for joining us.